Hey, I'm Dan Westfall. I'm a certified financial planner, and my company is Client Focused Financial. Uh, Topic I want to talk about today, and this is just a common thing that I see with people that have 401k plans, is people invested in what's called a target date fund. One way that you can take advantage of the drops that have happened here over the last month would be taking advantage of target date funds, where a target date fund is something that is geared towards your ideal retirement date. This could be, if you're a younger person, you may be, 30 years out and you might be retiring in 2050. If you're getting a little bit closer to retiring, you might be at that spot where your target date is 2025. So within there's this mix of stocks and bonds that fluctuate as you get closer to that. You have more bonds within the portfolio. Problem with that I have with target date funds is, number one, they're more expensive. Number two, there's always better funds within your 401k to pick from than target date funds. So one way that you can take advantage of the drops right now, especially if you're a younger person and you're in a target date fund, is by shifting money out of the bond portion within the target date into the stock portion. If you're younger than 30, there's really no reason at all that you should have any portion of your money sitting within bonds right now, being that interest rates are at such a low spot. There's not really a great outlook for bonds over the next 5 years or so, because interest rates are at such a low point right now, especially when you consider where interest rates are at. Stocks on the other side are at a lot lower point because of what's happened because of the coronavirus here recently. So what you can do, and if you look inside of a target date fund at the actual holdings in there, it'll show you exactly what's held within it. So they're just individual funds that you could directly invest in. So that would be my number one recommendation for people, would be to rebalance those target date funds into using an S&P 500 index fund. If you're a little bit older and you do need some portion held within bonds, more than likely there's going to be some type of bond fund within your 401k plan that you can pick out. And if you use index funds for all of these, it'll end up actually being cheaper, because the funds that are used within the target date fund, those are index funds. And what the index fund company does is they just charge a little bit higher of a percentage just to combine those funds together. You could just bypass the middleman and do that yourself within your 401k plan, and that would save you a little bit of money. And if you're a younger person out there, that would avoid having money just sitting on its ass, sitting in a bond fund where it's not going to do a lot for you compared to what stocks will do over the next 30, 40 years for you. If you have questions for me about how that works and what that looks like, I'd be more than happy to have a conversation with you or take a look at your 401k plan with you. Feel free to reach out to me, DM me, give me a call, check out my website and schedule a meeting. I'd be more than happy to go from there with that. I'll put a link in the comments section here for my website, so that way you can go check the website out, and if you'd like to schedule a meeting, you can do that from there. Appreciate you taking the time to check me out.